Zacks Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. Dividend Attraction. Is that anything like Fatal Attraction? I don't know. We'll find out with Kevin Matras, our top stock screener here at Zacks.com and the head of our Research Wizard division. Boy, that sounds ominous. Dividend Attraction.
Yeah.
But actually, in the realm of investing, you're talking about companies that pay large dividends, correct?
Yeah, the whole reason for the setup with this screen today is because, we've got fourth quarter GDP coming out on Friday, which is the 29th.
Yep.
And it's expected to show the economy grew at 4.5%. But if you were to look further out into the year and beyond, a lot of people believe that the growth rate for the U.S. is probably going to normalize to a much lower 2% per annum than the historical 3%. Now, that doesn't sound like a big deal, 1 point, but that's a 33% difference. So I think if you look at it, I think one of the reasons why we're looking at these lower projected growth rates is because you do see this across the board deleveraging. You're seeing this happening in businesses. You're also seeing it happen in individuals, households as well. And I believe that in general, we've already seen it in the past, but I think we're going to see a lot of this going forward too. I think in general, some companies are going to find it harder to acquire credit, harder to acquire financing to expand their businesses. And I think consumers as well are going to find similar difficulty. So I believe that while small cap companies with innovative products and services are always going to be sought after companies, I think as we move forward, I think a lot of these larger cap companies with solid earnings that have a great deal of stability, I think these companies are going to start gathering additional attention, and these are going to be companies that are going to be highly sought after as well.
Yeah, I haven't had any leverage in my household for a long time personally. But sticking with your topic here, it is generally the larger companies that pay dividends, correct?
Yeah.
Larger cap companies?
It usually is the larger cap companies. I don't want to say exclusively, but you'll get some mids in there as well. But the larger cap companies are large because they have a very loyal and established customer base. They also have widespread usage of their products, and that's one of the reasons why they're able to show steady and sustainable growth rates even during tough economic times. Financing usually is not an issue for these kinds of companies.
I was going to say they have more money too.
Yeah, they got a ton of money, and they're normally generating, tons of cash as well. They may not have the same kind of growth rate opportunities that they once had, but again, they're usually able to generate good, steady streams of cash. And again, a lot of these companies will pay their shareholders a dividend when they get in, so that's always nice as well. But again, as I said before, I think that as people are looking at these different investment vehicles, I think it is going to be the companies that offer a little bit extra, which is the dividends. I think these companies are probably going to have an edge. And what's interesting, though, and one of the purposes for this screen is, in the past, you have seen a lot of companies that have cut their dividends.
Yeah.
And a lot of companies have just stopped paying dividends altogether. Now, it is harder to find companies that have good payout ratios, but because of what we have seen, it does make screening for those companies a little bit harder.
So small cap companies, by and large, do not pay a dividend, correct?
Usually they don't. You won't see that happening, and that is because a lot of these smaller cap companies, they are taking all of their earnings and they're pouring it into their company to be able to really grow their business. And as I said earlier, a lot of these larger cap companies who are solid, very stable, producing lots of cash, they may not have, because of the size, they may not have the kinds of aggressive growth opportunities that marked their earlier stages in their cycle. And what these companies do is they reward their shareholders by paying them a dividend. And this is one of the things that we're going to be looking at in today's screen.
All right, don't keep us hanging anymore. Take us down those parameters.
All right, check it out. The screen starts off by looking at companies with a Zacks rank of less than or equals to 3. Usually I'll look at 1s and 2s, but I'm opening it up to the 3s because sometimes a lot of the larger cap companies can't really make it into the 1 or 2 spot because it's a very competitive position. But there's still a lot of great companies in that 3 position. But we are definitely excluding sells and strong sells.
Okay.
We also want companies with a 5-year historical growth rate to be greater than or equals to 10%. Once again, it has to have a history of solid growth. Then the next 3 to 5 year projected growth rate has to be greater than or equals to 10% as well. So not only does it have to have a strong history of growth, we also want to make sure that it has, projected growth rates that are stable as well. Otherwise, you may get into a situation where they may have to cut the dividend or reduce the dividend. So we want to make sure that these guys are on solid footing. Then we want the 5-year average dividend yield to be greater than the average dividend yield for the S&P, so we want to find above average market yields. And then lastly, we want the current dividend yield to be greater than the 5-year average dividend yield. So again, we want to see their dividend yield getting better than what has been their historical norm.
All right, stocks that came through.
Yeah, there was a bunch of stocks that came through. Here are 5 stocks, a bunch of different industries. We've got Abbott Labs, Aflac, Emerson, Electric Company, Allen Corp, and Snap-on. All of these companies are attractive companies. They all look good in terms of potential price appreciation. And again, they all have nice dividends.
All right, do you own any?
I do have Aflac.
All righty. Check out the text version of this week's screen on Zacks.com's homepage. That's where you can link to it from when you scroll down that page to Kevin's picture and click on the live link that's right next to it. That's generally the headline of the text version of this article. And if you want to know more about the Research Wizard tool that Kevin uses to achieve all of these screens, Zacks.com/Research Wizard is the place to go online. With Kevin Matras and the Screen of the Week, I'm Terry Ruffalo.